The U.S. government just bought 200,000 Bitcoin. China's digital yuan has processed over $1 trillion, and the crypto market hit 3.8 trillion in market cap. This isn't 2021 hype. This is 2025, and everything has changed. Remember when crypto was just for tech nerds and speculators? Well, now Uncle Sam himself is hodling Bitcoin. President Trump signed an executive order establishing America's strategic Bitcoin reserve, making the U.S. the largest known government holder of Bitcoin in the world. This isn't some small experiment. We're talking about 200,000 Bitcoin sitting in federal vaults worth billions at current prices. But here's where it gets really interesting. This move triggered a domino effect across the globe. Other nations are scrambling to establish their own digital asset reserves because nobody wants to be left behind in what might be the biggest monetary shift since we went off the gold standard. Meanwhile, in Europe, they've completely rewritten the rulebook. The EU's MiCA regulation went live, creating the world's first comprehensive crypto framework across 27 countries. Major exchanges like Coinbase and Crypto.com can now operate legally across the entire European Union with a single license. Think about that. From Portugal to Poland, one set of rules, one license, instant access to 450 million people. The market responded exactly how you'd expect. Bitcoin smashed through $100,000 for the first time ever, hitting $108,786 in January. But then reality hit. Trade war fears and economic jitters sent prices tumbling. By March, Bitcoin had dropped back to around $80,000. Ethereum got even harder, falling 45% in the first quarter. But here's what most people missed while watching the price roller coaster. The real revolution was happening behind the scenes. BlackRock, the world's largest asset manager, now has nearly $3 billion in their tokenized Treasury fund on Ethereum. Let that sink in. Traditional government bonds living on the same blockchain as your favorite DeFi protocols. Venture capital is pouring in at levels we haven't seen since the last bull run. Nearly $5 billion in Q1 alone, with Binance securing a massive $2 billion investment. These aren't retail investors throwing money at dog coins. These are institutional players betting on infrastructure and real-world applications. Speaking of real-world, the sustainability narrative completely flipped. New data from Cambridge University shows over 52% of Bitcoin mining now runs on sustainable energy. Nuclear and renewables are replacing coal at record speed. The environmental FUD is basically dead. The AI revolution hit crypto hard this year. Trading bots using advanced neural networks are hitting 99% accuracy in backtesting. Major projects are merging AI with blockchain, creating decentralized computing networks that could rival big tech's monopoly on AI infrastructure. But the biggest shocker? Central bank digital currencies are actually happening. China's digital yuan processed over $1.2 trillion in cross-border transactions. India's digital rupee has 6 million users. The EU's digital euro launches this October. These aren't cryptocurrencies. They're government-controlled digital cash, and they're spreading fast. What does all this mean? We're watching the birth of a new financial system. It's not replacing the old one overnight, but running parallel to it. Traditional banks are tokenizing assets. Governments are building Bitcoin reserves. Regulations are creating clear rules instead of enforcement chaos. The cowboy days of crypto are ending. What's emerging is something bigger, a hybrid system where your bank account, your Bitcoin wallet, and your tokenized stocks all exist in the same digital ecosystem. Some call it scary, others call it inevitable. The question isn't whether this transformation will happen. It's already happening. The real question is whether you'll be ready for it. Like and subscribe if you enjoyed the video.